We're basically giving back the gains that were made on Friday, and we haven't even closed yet for the day. So obviously it's disappointing to see that. It would have been nice to see if we could have some carry through into this week, albeit perhaps not as sizable, but nonetheless at least holding its own, particularly with the Fed intervening the way it did yesterday. But the fact is there's a bull market in uncertainty at the moment, Tyler, and until we have some handle around when the number of cases is going to at least begin to decelerate, the market's going to continue to search for a bottom, and we're going to have to live with these bouts of volatility for good or for bad. Now, the market is tremendously oversold at this juncture, which implies we could, on any day or hour, see a rather significant ricochet rally. But again, its legitimacy will be challenged by way of any kind of persistent follow-through, unless, of course, we get confirmation, even perhaps starting in Italy, that the number of new cases being reported begins to subside.
That's a good question, Victoria, because obviously there's a monetary stimulus in the system now. There is at least some fiscal stimulus coming in the form of the package that was moved through the House on Friday night. But it would seem to me that you don't get a market to turn around on just those two things, though they can be very helpful. In this particular and peculiar case, you need to see some progress on the health front before people have any confidence to go out and buy new cars and do anything other than go to the grocery store and load up on staples and paper goods.
No, you're exactly right, Tyler. I mean, the Fed is not here to solve the health crisis, right? The Fed is here to ensure that the markets are functioning properly. So the injection of liquidity that they did is exactly what's needed. We saw illiquidity on our trading desk this morning as we were trying to address some of those measures. But we really need to wait and see here in the U.S. when these cases get to that peak number. Once we see the cases peak, once we see those cases then start to decline, some of the fear and the panic that we're seeing in the markets will begin to subside. At that point, things that the Fed has done will come into play more and allow it to be maybe a stronger recovery than we would have had otherwise. But we're not going to see the market stabilize until the health issues and that peak number of cases is reached.
You know, Mark, the Dow has lost roughly a third of its value. The Russell has lost more than that. Can you envision a situation where it loses another third of its value?
Well, Tyler, obviously in this environment, anything is possible. However, you mentioned a third, and that happens to be roughly what we typically see in the drawdown in the equity market in or coincident with a recession. So in my view, at this point, equities are presenting a compression in valuation and price that largely have pulled forward the odds of a recession, which are increasing, as Steve, of course, talked about, and seems likely we're going to have at least one negative quarterly print, if not successive. And so I think perhaps while we still could see lower levels from where we're trading today, I think investors should be at least beginning to leg into certain very high-quality franchises that have been sold off indiscriminately in this environment, because I think 12 months hence, they'll find it to have been very rewarding.